Good morning. It's Monday, and it's about an hour after the market has opened. And overnight trading, market went up quite a bit. I think the S&P was up about 25 points, and the Dow Jones in the futures market was up around 150, I think. Nasdaq not so much. Nasdaq was only like up 25 points, which is pretty unusual, but you got to remember it's close to its top right here. This reached pretty close to its top, and same with the Dow. Here's the line right here, pretty close to its top, and then the Russell actually popped up, and it looks like it's starting to come down. So this could be considered a good place to buy more put options, or if you haven't bought put options yet, it'd be a good idea to buy that, and I would buy it at least a month out, maybe even May puts if you're going in longer term. If you're day trading, of course, different story. You can still buy them a month out, but anyway, we'll talk about that in a second. So as it is now, I have put positions in there, and I'm holding on to those. And so I think that's about it as far as this goes. Market is still trending down. I'm going to go into a different chart here. All right, so here's the ES. This is a 4-hour chart, and the market, this is what happened during the night hours and what's happening now. So it looks like the market's coming down. It looks like it came really close to this top. So this is a top right about here. And it's pretty darn close. It doesn't have to come exactly to the top, but real close. So when the markets come up to the top, especially when they open up really early and they come up, it's a good time to get into a position going down. In the daily chart, we're still trending down. We're still in the bear market. In a shorter time frame, looks like the market was going up, so there's like a mini bull market here. Came up, popped up, and now it's coming down. So this could be the change in this trend, this short-term trend here going down, and I believe that's what it is. It's eventually going to come down. So I thought it would come down here by April and maybe the first 2 weeks of April, and so it looks like it's still on target, but needs to be coming down pretty fast if that's going to happen. I don't like to make predictions, but the point is, I believe we're in a downtrend, and this market is eventually coming down. The question is when. So there's a matter of timing. When you buy options, and even if you buy stocks, you still have to time the market. There's no way around that. So experience teaches you that. So in conclusion of that, like I mentioned earlier, when the market was up here, it could have been a good time to short the market. And of course, if the market, I'll go into a different time frame. If you're a longer term trader, out for a couple weeks, a month, and you shorted the market and the market kept popping up here, then you'll have to decide if you're going to get out or not. For me, I would stay in only because, like I said, we're at the top and the market's already overstretched. There hasn't been a correction from here to here. So at least, at the minimum, we need to have a correction. Good time to buy options. If it corrected to here, you can actually get out if that happens today. So that would turn into a day trade. So there's a lot of ways of playing this. But the point is, you always need to know where the momentum is, where the trend is before you get into any market. You have to look at the longer term charts and the 5-minute chart, maybe 1-hour charts, 4-hour charts, just to see where the trend is within those charts. And if they all pretty much coincide, then things have to match up. Like you have to. This matched up because this is a long trend downturn. This looks like it could be at the end of this little bull run here. There's no confirmation yet, but it did hit a top pretty close to the top, and now it's starting to head back down. So of course, to break this confirmation of this bull market, it has to break this line and come down into this area, and then that looks like a pretty good confirmation to me. But I still think that this pretty much was a spike leading downwards, and I could be wrong, but I'm putting my money on it. And this is all through experience. Okay, as a day trader, you can see the market actually it came down and it popped up here. Pretty sure that was open right here, and it popped up and it kind of consolidated right here into a little balanced area right here. You got to remember this is a good support line or resistance, depending on which way the market is, but I would say pretty much right there to about right there. And I would draw a trend line from here, yeah, somewhere out there. There. Okay, so you've got something pretty definitive here as far as where this market's at before it even went into this area. And so when the market broke down here, I was watching that. And so the way I trade, whether it's a 5-minute chart or a 4-hour chart, is I always wait for a second bar for confirmation. The second bar never went below the first bar, and it came right back up. So now that system doesn't always work, but it's in the 90% range. So I do trade according to that. And of course it went back up and it came back down. And the other rule that I see is when it comes back down the second time after it broke through and it came up, and then it came down and it broke down underneath this balance area with momentum going down, because like I said, it's pretty close to the top. We're in the downtrend, I believe. Then that could be you could get in any time around here. Now if it popped up again, then it changes things. You might have to get out or wait. Like I mentioned before, if you think in the longer term this is going to go down, then if it popped up on a day trade and even up in this area, you could have held on to your position because you bought options that are out for, let's say, a month. And then of course the market will probably turn around and come down. On a day trade, if you buy it to where it's only good for one day, different story. You have to set your stop. So if it pops up here, you might have to get out because it could go further up. So that's two ways of playing it, and that's how I play it. I usually like to buy the options further out. The only difference is dollar for dollar. They move about the same, but they cost a lot more. That's the only thing. So if you don't have that much money, then you might have to do the day trade where it expires within the hour. So far so good. It looks good. It's close to 8 o'clock. And like I said before, if the market moves either direction too early, then especially when it's exhausted at the end, then the only other choice it has is to come down. Now it's only 8 o'clock, so this market still could come back up. There's still plenty of time for that, but well, we'll see. And there's, at this point at 8 o'clock, it still could go down and then bounce around and then continue down. So two scenarios there. If you're a day trader, you could have gotten out right about this area here. There's some good support right here, and taken your profit from here to here and just walk away. Or you can wait for another time to get in. So I thought this was pretty good, pretty much of a 90% trade, meaning that pretty sure it was going to go down today, at least to here, you know, correction to here, and then that's a good day trade right there. Longer term trade, of course, you bought put options here, and then you just wait till it goes down, and you might have to buy them at least a month out. All right, so that's two ways of trading. I like to make these videos to where you understand how the market works, but also that you know where to get in the market, because this is all about making money. You want to make money doing this. You just don't want to learn how the charts work or how the different systems that are out there. That's all great to learn, but you also want to know. I mean, this is about making money, so you want to know entry points and exit points. That's the main reason why I'm doing this. Of course, to teach you how these patterns work, and to teach you that helps you to learn when to get in and also when to get out. Like I said, this on a day trade market coming here, you could have gotten out right about here. Good time to get out right now. Take your profit from here. Could be a couple $100, could be a couple $1,000. If you're in a longer term trade but you're still day trading, then you hang on to your position, you wait till it goes down. If it pops back up here and you still believe this market's going down, well, you got a month until this thing expires and you can wait. So that's what I call a DTIP, Day Trading Insurance Plan. I think I'm the one that came up with this. I don't see anybody else that does this, but you can day trade with longer term options. And it can be both a day trade and long term. You can convert it. If you only, like I said, if you only buy a couple days out, strictly a day trade. So, okay, so I think that's it for today. Oh yeah, here's another thing. As you know, I always watch the Russell. I don't make a move until this Russell. If this Russell continues down, then I'll stay with my position. If it starts to come up like it is here, now that could just be a retracement from here to here, up to about this point, and then hopefully it comes down and fills this gap. So that's possible it's going to happen today, but I watch this and I don't get into a trade unless this thing's already heading down, because like I mentioned before, the Russell seems to be leading the way down. NASDAQ leading the way up. But NASDAQ's not doing too well, actually. It's, let's look at a longer term. It's at its top right here. And it's only moved, actually right now, it's minus 10. So it's actually at a minus right now. And it's at its top. Dow Jones is still plus 154, and it hit its top. So it looks like a good place to come down. All of this looks really good for coming down. That's the point that I'm making. So back to the Russell. So I don't make a move until I see this Russell continue down. This is a longer term chart here. And eventually when this Russell breaks down below this, then you've got a pretty big free fall, because this is a long term. So this is a longer term chart where Russell, I believe, is going to eventually break here and do a free fall just like the Dow did over here. It broke this and it came down, retested the top like markets normally do, starts to come down and then breaks and goes down here. Now that's for longer term. Of course, day trading, different story. Day trading, you're going to be trading differently unless you do that the DTIP, the Day Trading Insurance Plan, like I said, where you just get in on a day trade but you buy options further out, let's say a month, and this way you can convert your day trades into a longer term trades, or the other way around. You can do the longer term trades and use it as a day trade, and if you gain a lot of profit within the day trade, get out, and then you can always get back in. So you got to remember, opportunities in these market happens, I would say, at least once a day. And maybe there's some days, there might be one day out of a week that you don't trade because you don't see setups. All the setups that I get into, I get in there because I believe they're a 90% win. And that's why my losses are very small and they're very few, where a lot of day traders just hop in and out all day long, and they'll make 10,000, they'll lose 10,000, they'll make another 10,000. It just goes back and forth. Okay, so that's it for this video. I've got my positions in, and we'll see what happens tomorrow. We'll see what happens today, and hopefully this thing starts coming down here, and then that's it. I did mention on Friday I was going to sell all my positions. I didn't do that. And if that happens today, then I might plan on doing that, because I need to roll over my April options that are going to expire in about 2 weeks. So when they get that close, kind of get a little nervous with that. So hopefully it comes down here, and then I can sell those out and roll them over. Okay, so that's it for today. I'll talk to you guys tomorrow.